Is the Toronto real estate market going to crash by the end of this year? Maybe, maybe not. Not if sellers have anything to say about it, because supply of urban houses and condos, houses are down. Supply of houses is down 20% over the past 5 weeks, with the biggest drop in supply happening this past week. And condos are down 14.3% in supply. We're not talking about prices here. We're talking about the amount of available listings on the market in Toronto's urban community is down 20% for houses, 14.3% for condos. What does that prove to us? That proves to us that Toronto does not have a whole bunch of over-leveraged panic sellers that put their condos and houses on the market at the slightest hint of economic turmoil, which is what I've been saying over and over and over and over again. And the supply side of things really drove that message home right now, because right now the Toronto real estate market is behaving normally as it would in any other summer slowdown. That's not to say the summer, before you Twitter warriors get all crazy on me, I'm not saying that there is no slowdown. I'm not saying that prices aren't down right now. All I'm saying is that things could be a hell of a lot worse if we had 2, 3, 4 times the number of properties on the market right now, which is what a lot of people expected. So still, a lot of the stories that are going around right now that are trying to describe this market as some sort of sky is falling Chicken Little situation are using anecdotal evidence of, one property selling for $2 million today, selling for $1.4 million the next day. There's a classic example of one just yesterday that I saw on Twitter, somebody laughing about the fact that a property sold for $2 million in February with a long close. The guy didn't close, and then it resold for $1.6 or $1.7 million, claiming that somebody took a $300,000 loss. When in reality, the original buyer bought the place for $900,000 and still made a handsome return, and also was able to go after that defaulted buyer to recover that gap. So, long story short, don't listen to anecdotal evidence and take it as fact. The market is definitely slower right now, and there is a ton of opportunity for buyers in the assignment market. And the biggest opportunity I think that exists in the market right now are for those first-time buyers that insist on buying a house over a condo that have a budget under $1 million. You previously could not get into the market, especially in any of our urban communities, for under $1 million unless you wanted to do a tremendous amount of work to that home. These houses that probably should have been trading somewhere in the mid to high 800s, low 900s, those were breaching that $1 million threshold in January, February, March of this year and selling for far more than what a lot considered to be market value. So first-time buyers or buyers of homes under $1 million right now have an opportunity to buy that home for less than $1 million, number one, which is probably in line with their mortgage approval, which approves people up to $999,000 if they can't meet certain down payment thresholds. But that's another video for another day. So those buyers in that price point are really happy right now, and there is no reason to not make that purchase today, as long as you're not as long as you make sure you don't max out on your buy. If you're approved for $1 million, bump it down a little bit, leave a buffer just in case things go down. You need to have the ability to absorb a higher mortgage payment. But again, if you're going variable, I've always been a variable guy. Especially if you're on a fixed payment, your payments don't change. It's a lot less dramatic out there than some people would like to lead you to believe. So let's just dig into the blog here. I will show you what we have going on. So let's look at some of these numbers right here. So like I said, we have supply for houses down 20% to 511 units. So I didn't even open up my maps, but let's open up my maps right now. Maps.google.ca. Actually, let's pause this recording for a moment, shall we? How do we do that? Okay, so back at it here. Sorry for that little blip, but I'll figure out how to edit this stuff later. So when I'm talking about the areas, I think I did this in last week's video as well. I'm talking about the city of Toronto from the Etobicoke-Toronto border, following the Bloor-Danforth line all the way up to the east end of the beach. And, whoops, let's close that off. East end of the beach down to here. So it's a pretty big chunk of Toronto that is fairly urban. So that's the neighborhood that I'm tracking when I'm talking about there only being 511 houses for sale in that huge area. You'd expect a much more dramatic story, which is not the case. So the main reason for this slowdown that we're seeing right now is the fact that there are a ton of buyers still on the sidelines. What's really also hugely, bigly, whatever that word is, comforting to see is also a decline in the number of condo units available for sale. And a lot of people love to shit on condos. They just love to call, the derogatory terms and names for condos. The box in the sky, this like shithole you don't even own. You don't own your doors, your balcony. Why would you buy it? Why would you pay maintenance fees? First of all, houses have maintenance fees too, okay? They're just a variable cost versus a fixed one in condos. So it's not so, black and white. There's a lot of gray area that you need to pay attention to. But I digress. What we were seeing 5 weeks ago was I have that my previous blog linked here, was almost 2,000 units for sale. And we saw a dramatic drop last week to this week. And that shows me that people are just out there enjoying the summertime like they normally would. They're not panicking. They know that there's another interest rate announcement coming in September. There's one coming in October after that, and another one in November after that. There are potentially 3 more interest rate hikes this year, but I really don't think we're going to see 1% hikes towards the end of this year. But who knows? We could not. I don't have a crystal ball for that stuff, but I really see us really, having a couple more increases this year, perhaps even into 2023. But I see them being more reasonable increases and things to kind of start leveling out mid 2023, which is also in line with what a lot of the big banks economists are also saying. But what's really important for me to point out here is if you're waiting for these monthly statistics to come out, it's August the 2nd, and the Toronto Real Estate Board hasn't yet released the monthly figures. This is why it's very important that you pay attention to real estate agents, economists, and brokers that are breaking down the data for you in real time so you understand exactly what's going on out there. Because waiting for monthly data to come out and real estate agents to regurgitate the monthly information that comes out that talks about the GTA as a whole or the 416 as a whole is not going to tell you the picture of what your property will perform like today on a street in downtown Toronto or in and around the downtown community. So in the past, since I've been doing this, March of 2020, 126 weeks in a row, whenever I've seen 3 weeks in a row of some sort of trend, whether it's increasing supply, decreasing supply, it did signal a bit of a path forward, or it gave us a window into the next couple of months of how the real estate market is going to be performing. Like, that doesn't mean we're going to be headed into a seller's market. By no means are we headed into a seller's market because there are so many buyers on the sidelines right now. But I do see us putting sellers back in the driver's seat at some point deeper into 2023, as hopefully at that point interest rates start to come down a little bit as long as inflation is kept in check. But now with the U.S. potentially going to war with China and Russia-Ukraine situation happening, who knows how much longer this is going to be going on. But anyway, that's I guess a topic for another day. But again, we don't have panic sellers here. And that's been proven over and over and over again. If you don't believe that by now, then there's nothing that's going to help you believe that. If you haven't subscribed, I would love a subscribe, please. But here's where all the money is right here. As you can see, every single week since the beginning of March, we've been plotting the average and median of condos and houses. And you can see this downward trend right here. And a lot of people here assume that houses are selling for a ton less than they were in January and February. And make no mistake, there are homes that were trading at $2 million that are probably trading 1.6 to 1.7 right now. But that's not an across the board situation. There are homes, it seems like those homes that were valued in like that 1.5, 1.6 range were pushing that 1.7, 1.8 range in January and February. So there are some buyers that are a couple $100,000 in the red right now. But again, when you're thinking long term, you're not really moving out of that house that you just bought for $2 million in the next year. Long term, you are still going to be okay despite buying at the top of the market, but again, we are not day traders, so we cannot time this top or bottom of the market. If you need to make some sort of move for your family, if you need to make some sort of move for yourself, for your work, for your friends, for your life, for your whatever it is, those are still commitments you've made to yourself. Those are still moves you're making for the right reasons. A house happens to also be an investment, but that's not the number one priority. And if you think long term, you're going to be just fine. So please just don't panic about that sort of thing. If your house is worth less today or condo is worth less today than it is tomorrow, very likely chance your condo is actually not worth less today. Condos have been moving really, really well, moving really, really strongly. And honestly, a lot of investors are buying these condos right now. Of course, they were before, but these investors are buying houses and they're buying condos right now because the rental market is so absolutely intense that you can cash flow on a property that was nowhere near a cash flow position a couple of months ago. So that's a really interesting thing that we're seeing out there right now. So back into the blog, we can see here, my little face around, that we're having some bigger ticket sales happening here, which is bringing that average price back up. But again, with only 41 data points here, it's not really much to write home about. But it is what it is. But again, months of inventory numbers, I'm going to run these next week while some of the data settles. I didn't want to do that today. It's so close after a long weekend. Some of the information's not updated. So I wanted to take some time. So we'll be running the new MOI figures next week. So make sure you pay attention for that. Condo prices did actually take a bit of a hit if you're paying attention to average price week over week. The first week, it's under $800,000 in quite a while. But when you look deeper into these 68 firm sales, and remember, normally we're at about 170 to 220 sales is the normal weekly number here. So we're way off of that. But there's no product in the luxury condo market right now. And I've got to come off of this for a second just to make a really important point. This past week, one thing happened to me and to one of our agents that I hadn't had happen since January, February of this year. I got a phone call from an agent asking if I had any properties coming to market because their clients hadn't found what they wanted on the MLS, on the open market. That normally happens when you're in a serious seller's market with seriously depleted inventory. Like I showed you up here. Actually, you can't see my screen anymore. Let me share that again with you. We had 511 active listings here. Back in January and February, this was in the low to mid 200s, less than half of the amount of properties on the market. That's when we were getting those calls. So very interesting to me that right now we're getting calls from agents, and not just one call. Like I got 2 phone calls this past week. Our agent Mila got a phone call this past week about the exact same thing. I haven't yet gone around to see if this is something that other agents are experiencing, and I don't want to take our situation as some sort of fact, like I was saying before. But it's an interesting thing that agents are calling around because their clients can't find what they're looking for. So moving on into what am I saying here? Buyers firmly planted on that bench. Honestly, if you want to sit on the bench, you go ahead. You're not costing yourself money. You're not losing money. It is what it is. You jump in whenever you feel like you're ready to jump in. If you're buying with a partner, make sure you've got a family budget put together. Leave a buffer in there. There's no reason why you shouldn't jump in. We had a client this week tell us that they wanted to wait until we had a client this week on the team. We discussed it at the team meeting. They wanted to wait until January to make a purchase because they felt as though after the 2 interest rate increases happened, they felt that prices would come down enough for them to buy something that they can't afford today. But I don't know what mortgage broker is going to hold a rate from now until January. So if rates do go up like this couple was expecting, and if it affects prices like this couple was expecting, they might buy a property for less, but their payment will probably be the same as it was had they bought it today. So, and that's fine because, it puts them in a position where they could, sell the thing sooner and not be underwater on it. But, we're not in Toronto's urban markets. You don't find too many buyers underwater after a short time after buying the property. So anyway, another interesting little tidbit. Let's go back to the blog here. Keep this one relatively short. I want to jump in my pool soon. Real estate long-term game, and advising all of our buyers right now to not max out on their purchase. Leave a bit of a buffer there for sure. That is something that is big time. But again, here comes the assignment talk again. Honestly, I got right now, we've got 15 assignments on the books right now. Every single one of them is increased only the amount of the commission that the realtors get paid. Aside from that, it's pretty much just at the same price the buyer had bought the unit for. So many amazing assignment deals. And listen, you want to ride out whatever's going to happen in the next year and a half. Let me find you an assignment that closes in a year and a half to 3 years down the road. Somebody who just wants to get their money back and move on. You're comfortable putting your money and parking it and, kind of not looking at it until a year and a half from now to 3 years from now. An assignment is an excellent place to do that. You can write out anything that's happening right now. Maybe the rental market won't be as good at the time, but whatever it is, amazing opportunities in the assignment market right now. And resale, of course, offers amazing opportunities there as well. So we've got the Rosedale, Moore Park, Deer Park, Lawrence Park areas that are doing what they do. Again, only 3 sales, so there's really not much to talk about here in terms of average price, such a small data set. But as you can see, listings pulled back there based on last week as well. Their months of inventory doesn't fluctuate too much. Although at the lowest point, this was down to 39 units over a year ago, actually, when the luxury market was really popping off. Not this summer, but the past summer and the summer before that, things were going nuts. So this was been much better supplied since then. And Condo's doing what they're doing. What else we have here? Not much else to really talk about there. Oh yeah, there's one really important thing to talk about. We did launch a new search tool for our clients, which is really great because not only does it get you to you search like a realtor can, but wait for this right here. Ready for this? Sold data. You can finally look for sold information on any property you want on this tool. You can create an account, you can create searches, you can do all kinds of things. I have one pre-populated here for properties under $1 million, and there are way more of them today than there were before, which is really nice to see for those entry-level buyers. So we did create that search tool, and I'm going to send out a link to it so you guys can all check it out. But aside from that, I think that is all I have to say. The weather is too nice for me to be stuck in my garage here, so I'm going to go jump in my pool. I would love a subscribe. We're getting there. I need to get to 100 subscribers by the end of this week, but the goal is to get to 1,000. So if you get any value out of anything that I'm saying here, if Spring Team has helped you out at all, hell, if you just like the way my hat looks, it's a good cleaning, actually. I've been wearing it a lot. Throw a subscribe, a comment. I want to hear about all the things you're wanting to know about so we can make all the videos about it. We're going to get some of our team members going here. But yeah, I want to be giving you guys the information you want. So subscribe to the newsletter, springteam.ca. It's all there. Love you. Thank you. Week 126. I'll see you in week 127 next week. Peace out.